I'll be damned. It looks like the markets passed the report card. The Fed minutes came out and nothing changed. I repeat, literally nothing changed, and the market's seen that as a positive. Like we indicated in the last video, it likely would if nothing changed. So we are seeing this bullish reaction. Now the SPY is positive heading into the close of the day. AMC is also positive. They have been positive all day, sitting up right now 1.75% to the positive. We've moved around a lot, but we really have not done all too much. I want to see if we get that $20 close by the end of the day. That is going to be incredibly bullish in my personal opinion, and that is what I hope to see. If we see a close above $20, or at the very least in after hours, which I think is very likely, that will set us up for the next rally, and that looks very encouraging. But we're going to go over exactly what the Fed said here in this video, as well as what the economic data is heading into and throughout the rest of this week, as well as touch on this whole Ukraine situation. I'm starting to think it's a lot of bullshit, but you are getting some new reports that we must go over here in this video. So let's dive into it. If you guys are new to the channel, my name is TCI. We cover everything AMC as well as the broad markets, any trades that I am making, or anything in general that will make you guys a lot of money. So stick around, let's make some money together, and let's dive into this video. But I must call out the sponsor of this video, which is myself. Link down below in the pinned comment, link for the buy and sell alerts. We have been hitting some monstrous trades over there, so check that out if you guys do want to. So getting into this video, AMC almost at $20 per share. Like I said, if we see a close above 20 in after hours or throughout regular trading, that is going to be really good. SPY is making that next leg up, so that looks beautiful. We're probably going back to that 450 range. So it looks like you're probably going to see some upside in a lot of our favorite names, including AMC, and this should give the markets a little bit of room to breathe. People were fearing the worst, especially after this emergency meeting that we just seen, and once the FOMC minutes came out, you have the algorithms that were scanning it. The SPY shot straight up, went straight back down, hit the low of the day, and then just continued to rally throughout, the rest of the day, ever since we got that. Came close to this 50-day moving average, and now everything is just ripping. So looking good in that aspect. I'm not going to sit here and argue with what the market's reaction is, but it's very, very irrational. And that's where if you can profit off of that, that is the best. And that's exactly what we're doing in the link down below in the pinned comment. So like I said, check that out. But we're going to get into the data that you guys need to know. Let's first off start with the market's expectations after this Fed report came out, and then dive in straight into what Fed Jerome Powell, what the FOMC minutes were. And this is hysterical. If you guys seen the last video, now it's 58.6% of market participants are pricing in about a 0.25% rate hike in this next upcoming meeting, which is going to be March 16th. It's completely flipped around, but nothing has really changed. They actually said that, hey, depending on what the data is, we could be looking at more rate hikes or a faster rate hike. But you're seeing market expectations relaxing, not really pricing in that 0.5% rate hike. So it's a lot of back and forth, just basically ping pong back and forth. Virtually off of nothing. Right? If we see right here, the minutes show Fed ready to raise rates, shrink balance sheet soon. The key points: Federal Reserve officials outlined plans for interest rate hikes and a reduction in the asset holdings on their balance sheet at their last meeting. Minutes released Wednesday from the January session show concern about inflation and financial stability, though members urged a measured approach to tightening monetary policy. FOMC members noted that inflation was beginning to spread beyond pandemic-affected sectors and into the broader economy. So inflation spreading faster than it ever has in the last 40 years since the 1980s, and we're going to wait to act on it. Inflation is one of those things where when it's here, it's very hard to get it to go away. And historically, we've pulled up the chart many times, so I don't want to right here in this video, but historically, you have to get the federal funds rate above inflation. So if they sit back and let inflation go crazy, go from 7% to 8% to 9% to 10%, you're going to be in this situation where they might have to raise the federal funds rate so high that you crush the economy and stop lending and borrowing altogether. So in my personal opinion, we'll look back at this in 6 or 12 months and be like, hey, he called it, or I was dumb as hell. But I think this is the biggest monetary policy failure in the history of America. Now, I might be a little biased here because I do have, some butterflies open for the downside, which should do well either way. But you don't sit back and do nothing when inflation is wreaking havoc on the economy. It will only get worse, right? All these companies come out and say they have pricing power on all their products they are selling. That's going to lead to more and more and more inflation. And inflation is one of those things where when it's here, those businesses that are not raising prices, like the restaurant that I used to work at, that my mom still works at, they're starting to raise prices in about a month or two. So there's a lot of lagging effects of inflation that are still yet to come. So I don't know what the hell's going on with the Fed, but it will also ultimately mean the markets will come down in a very substantial way, and they will have to crush the economy to get inflation down. So in the sense of the MOAS, that's exactly what we want to see, is this huge monetary policy error going on, because that will mean the markets will have to go into the toilet to get that inflation under control, but it will take a little bit more time. So keep that in mind, but nothing changed from the FOMC minutes that we have not already known about. And that's very surprising, considering since that January meeting, we got the inflation numbers that were 7.5%, and we had that emergency meeting. So I wonder what the hell they were talking about in there. Obviously, nothing productive. But let's dive into some of the other information that you guys need to know, and that's going to be the economic data. We do have a lot of speakers that are speaking tomorrow, as well as over the next couple of days. We have initial jobless claims as well, coming out at 1:30 tomorrow. So that's going to be very interesting. We have Fed Mester's speech. It says 10 p.m., but it's not at 10 p.m. Fed Bullard's speech also at 4 p.m. And you do have some ECB speakers. That is the European Central Bank. They do also speak tomorrow as well. So a lot of Fed speakers, that definitely could throw a wrench in the markets. But I think since we got the FOMC minutes out, you're kind of going to see things relax until that March 10th inflation reading, and then March 16th FOMC meeting. So keep that in mind. If Russia does invade Ukraine, that's obviously going to send the markets down pretty sharply, in my personal opinion. As far as the news headlines that we are getting today for that, you've seen that Russia and the U.S. were flying fighter jets very close to each other. Nothing really came about from that. The Secretary of State actually had to leave his meeting and go to a meeting with Biden in the White House. That's what sent the markets down at this point in the market today, which it looks so small when you're comparing it to this rally that we just seen. But that's what happened right here. Nothing came out about that, so it wouldn't surprise me later on today if we do get more information on what that meeting was about. You also did see reports that Russia has not moved any of their troops away from the border. They are still in striking position, as well as they are now creating field hospitals around the border of Ukraine, which obviously looks like they would be getting ready to invade. So depending on what happens there, I think it's bullshit because of Zelensky's comments. That is the president of Ukraine. The comments that he made on Facebook were sarcastic about a Russian invasion. They're not taking it seriously. I don't know why we are, and I don't know why the markets really care all too much. To be honest with you guys, it doesn't look like it's going to happen, and I would bet you guys that it doesn't happen. So if any of you guys want to take that bet, feel free. I will definitely bet you that there is no Russian invasion that is going to happen. So beyond that, nothing else too crazy. We got the big fear catalyst out of the way. It looks like we could have a green light to rally. AMC just does not care. AMC is going to do its own thing. It looks like that manipulation, like I've talked about over the past couple of videos, the manipulation over the past year is kind of going away, right? You're seeing this probe into Morgan Stanley, Goldman, other Wall Street firms, which is really the ones acting as liquidity providers. As we have went over many times, the three largest market makers, really the only three market makers for the broad New York Stock Exchange, as well as the other indexes, is Citadel number 1, 2 Goldman Sachs, and 3 Virtue. So they're all under investigation. Any of that fraudulent shit they were doing before has to come to an end if you want to remain out of prison, you don't want to get fines and all that, which best believe they don't want that. So obviously, if you're being probed into, they're not going to continue to do that manipulation. That's why AMC has had room to breathe and do what it wants to do. And if you're looking at this on a technical basis, we are at a very important level. Like I said, around $20 per share. That will give us that next floor to make that next leg up if we break out above 20. That's also a huge psychological level as well. If we do come down, I want to watch that 1925 level. That's really the low that we hit for today, as well as the tops of these days in here. And that was kind of a baseline level this day where we did hit almost $21 per share. So 1925, that's going to be an important level, as well as see if we can break out above $20 and hold that by the end of the day. Also another very important level. As far as AMC and the short interest, you're looking at 21.17% short interest of free float, 108.64 million shares that are sold short. Cost to borrow max is still approaching 4% at 3.94%, and the utilization is 100%. Again, that means that hedge funds, they don't want to lend out their stock for 4%, implying that a move to the upside is still coming. Once you see that utilization start to drop like we've seen on other stocks, that's, you know, when I would start to think hedge funds are a little bit less bullish on the stock, but we are not seeing any indications of that. Still staying at 100%, and nobody wants to lend out their stock. Days to cover is sitting at 2.4, so that really hasn't changed around all too much, but it's still, I mean, looking good. It's still hard for shorts to get out of their short positions when they want to. So looking good in that aspect. As far as the option analysis from the institutional investors, you see 18 orders today totaling $9.08 million, positive order value of 64%. A lot of $19 calls, $26 calls for June. A lot of June activity in general. February 25th, $19.50 call. September 16th, $21 call. A lot more $20 calls. And you have seen those super far out of the money calls as well, like the $30 March 18th calls, like we see right here, in the $50 May calls. We went over that on stream. It was almost $1 million in the $50 strike May calls. That are obviously far out the money. So institutional investors, they are very, very bullish on AMC. And like we went over in the last video as well, the max pain is still at $19 per share by Friday, and the Untitled Tracker data is still looking really good. If we see that bullish response carry over into tomorrow, which looks likely that it will, unless Russia obviously does invade Ukraine, which I don't think is likely. So I do expect a bullish rest of the week, with 65,000 calls that are in the money, 240,000 calls that are out of the money. That is 4 times the amount of calls that are out of the money compared to in the money. So certainly, if you see that break above 20 in a substantial way, I would expect a gamma squeeze to start at that moment, as we do have a lot of open interest at that $20 expiration. For puts, you do see 26,000 puts that are in the money and 119,000 puts that are out of the money. Again, if the stock does break above 20, you're going to see a lot of those puts run from obviously in the money to out of the money, and that could or would, I should say, force the market makers to buy a lot of stock to de-hedge those puts. All in all, about 2.6 million shares that might have to be bought by the market makers if that does happen. So looking good. Looking like a big failure on the part of the Fed, and that's going to cause a big drop just down the line into the future. They're not going to be able to do this soft landing. They're going to have to crush the economy into the ground. So some things to consider, but all in all, AMC does not care, and the situation looks incredibly bullish. After all, a lot of the manipulation is now out of the way, and we are free and clear to rally. So drop that like on the video. Consider subscribing to the channel. Let me know your thoughts on this down below in the comment section as well. Get yourself some free stock with Webull, Moomoo, and Public. Link down below in the description of this video, as well as if you guys want to join our private trading community, link in the pinned comment to do so for that. Thank you guys for watching, and I will see you in the next one.